I wish I was a first home buyer today. It's great.
That's probably the first time I've ever heard somebody say that.
You need to earn $164,000 a year to be able to buy property in capital cities across Australia.
I don't think I'd be able to get into the market at the age of 20 without the bank of mum and dad.
Welcome back to Property Now, where we are on a mission to make you the property pro in your group chat. Today, the great housing debate continues as we dive into the bank of mum and dad. We hope you enjoy.
I haven't sang in a while. Ah, sorry. Let's go.
You can.
Nah.
Mum
Sing.
and dad, bank of mum and dad.
I'm sorry, mama.
I didn't mean to take
I
your
didn't
money.
mean to borrow your money. I needed to buy a house with it.
Now I'm cleaning out my
Tonight,
closet.
I'm never paying you that money back. Anyway.
There's our segue, ladies and gents. All right, guys, we are back. We are talking about the bank of mum and dad.
Yeah.
Thanks, Mum.
What
I've
is
been
it?
very keen
Oh,
to
no, sorry.
get into this topic for a while. Will you let me finish?
Sorry, Zaz.
Will you let us start? Jeez.
Yeah, true.
You know what would be a good topic?
Well,
That reminds me. That's a good segue. Bank of mum and dad.
So Hex, right? Like,
So housing supply,
Do you guys reckon there's
you
an
keep this
episode in
interesting
this?
for me, guys. You keep this very interesting for me. You keep me on my toes.
Oh, I mean, geez.
what do you got there, Jace?
Oh, just some notes, man.
Jace has come equipped.
Yeah. Because
with
I'm
some
not going to
data.
rely on a computer.
How many
Yeah.
trees
The
have
bank's got it-
died because of your notes?
Oh, mate. Oh, that's true, eh? Mate,
We're-
this is not
we're
very
Chris, I-
ESG.
I
We're
just-
a paperless office.
I just
It's
got
not
Chris's
ESG
joke.
friendly.
Takes a while. It's all right.
The computer
Welcome.
jack's been going on for weeks.
No, but he just brought it back.
He
It was
actually
great.
faxed that to himself.
From home.
All right, enough funny business, boys. So bank of mum and dad, BOMAD.
Yeah.
I have been pretty keen to dig into this topic for a while. And what we're going to talk about today, basically, we're going to start with what is BOMAD, because not everyone might know. We're going to talk about, some advantages, benefits, examples of where it is a really good thing. And then on the flip side, I think it's important as well to dig into the risks, the downfalls, the consequences, and other bits and pieces. And then, as always, I think it's good as well to, include some potential alternatives and other avenues people who are looking to buy property can get into, because not everyone has access to the bank of mum and dad.
Mad.
So
And there's a new bank of mum and dad forming.
there is a new bank of mum and
There
dad?
is. We'll get into that.
Okay, all right.
Yeah.
Exciting. time.
Intriguing. A little
Ooh.
cliffhanger. All right, so I want to start by saying what the bank of mum and dad is. So essentially, very broad definition, but it is used to describe borrowing money from someone who either has accessible equity in an existing property or can lend money as a cash gift. I think there's also like a lot of other kind of like sub
Yeah.
bank of mum and dads that we can dig into as well, because it might not always be like a cash gift or equity from a property that the parents own. But we'll dig into that. In terms of some sort of top line, interesting statistics and data to explain the scope of the bank of mum and dad, because it is something that, we see popping up more and more, and it's not new by any means, but it's probably, and argue with me if you don't agree, but I think it's probably bigger than it ever has been right now. So it is, if the bank of mum and dad was an actual bank, it would be somewhere between the 5th and the 9th biggest financial institution in the country.
Crazy.
Which is wild. From the year 2002 to 2018, 1.5 trillion was transferred in Australia via inheritance and financial gifts. The amounts transferred ranged from 5K to 500K.
So that's just a financial gift. So that doesn't include like equity and stuff like that as well, right? Like that's pure cash.
Yeah, I guess inheritance and financial gifts, yeah. I would assume like inheritance would probably include property, because you might inherit property.
Yeah.
But we'll check on that. And the average amount transferred was 75K. So basically, long story short, a lot of wealth is being transferred from parents to their children, especially in terms of helping them get into property. So big numbers. But I think maybe, a good place to start with, because I know guys, Chris and Michael in particular, you've mentioned before on the podcast that you both were able to tap into the bank of mum and dad as a part of your, property story. And I think that might be a good place to start in terms of where it goes right, and the good things about it. Does anyone want to kick us off?
Yeah, I think Bank of Mum and Dad helped me get into my first property. So I used 2 avenues for the Bank of Mum and Dad. So one for the property and then the hotel of Mum and Dad. So I got to stay at home with Mum and Dad when I was 20.
Yeah.
I didn't have the full deposit at the time to be able to buy my first property. So I then asked Mum and Dad, would they be able to go guarantor for me for, the balance of the loan. So I borrowed 100%.
Yeah.
So I didn't have the deposit at all. Was able to borrow 100% for that property, using a guarantor from my parents' property. So they didn't give me physical cash. They allowed basically a guarantee on their existing property, their house, to then help me get a property. So I had an 80% loan on that existing property, and the 20% was guaranteed from my parents' property, and that helped me avoid lender's mortgage insurance at the time. But it allowed me to crack into the market. So that was a huge helping hand that I had.
Yeah.
The Bank of Mum and Dad, and of course the hotel of Mum and Dad as well, was a huge help to be able to afford the repayments, because I wasn't making huge money at the time.
Yeah.
I was working and studying at the same time, but still working full time. But that helped me be able to crack into the market and get into a really different way. I don't think I'd be able to get into the market at the age of 20 without the Bank of Mum and Dad.
Yeah, same.
No.
And I
Wouldn't
think
have
that's
been
an
able to-
interesting point, because it's not just the guaranteeing part, because from what you're saying, you're working and studying, living at home.
Yeah.
That means your borrowing capacity would have been greater because of the fact that you're living at home.
Correct.
Right? So if you weren't living at home,
Because you're not
let's
paying
say-
rent.
Yeah.
right?
So if you're paying rent, even if your parents guarantee for you, it'll help you save LMI, but your borrowing capacity is not going to get assisted.
Yep.
Right? So that's the dual benefit while you're living at home.
Well, so the BOMAD Bank of Mum and Dad helped me buy the property,
Yeah.
but the hotel of Mum and Dad actually helped me do one other, and I didn't notice it at the time, but one other significant strategy, which was I didn't have a HEX debt.
Yeah.
At the time, you could either choose, I don't know if it's still available, you could either choose to have a 20% discount.
Correct.
I don't know
That's
if
right.
anyone remembers.
Yeah, I
You
do.
could have-
Yeah.
So if your
Yeah.
course was $1,000 for that subject, you could either pay $800 up front, so 20% discount, or it would go to
Yeah.
HEX.
Mm.
Because I was able to live at home, I then said, well, I'll pay my university degree in full and not have HEX. So I got a 20% discount across the whole course every
Yeah, that's
Yeah.
semester.
you had
Do they
some
still-
advantages
do they
there,
still do
yeah.
that?
Not anymore.
No.
They
Yeah.
don't do that?
No, not anymore.
When did they stop that?
Oh, long time ago.
Yeah.
Yeah, because I don't
Really?
remember
Yeah, yeah.
when I was
So there's
studying.
no
So,
benefit
so
now.
there's no benefit to do it.
Yeah, so I think it's not only you paying it off in full, but if you pay a lump sum, you also get a discount as well back then. Yeah. So if you
Wow.
wanted to pay more than the usual installments they take out of your pay every fortnight or whatever, yeah.
That's crazy.
Yeah, so it's just gotten worse and worse. Yeah.
Right. But so you're saying, you were able to get that extra benefit of being in a position where you could, not that it's available
accumulate a
anymore.
HEX debt.
Yeah.
So-
Yeah.
Yeah,
was
so
able to
did
get-
you find out about the guarantor sort of, possibility after speaking to the person at the bank at CBA?
Yeah, so I spoke with Carol at
Yeah.
CBA, and she was just a local mortgage broker or mobile banker
Yep.
at the bank, and she was explaining to me this situation of being able to use a guarantor.
What, so did you go in, so not knowing that and just wanting to know, based on my current situation, what can I do? Like, you had no idea about this guarantor thing.
No idea about this guarantor thing.
Yeah,
And
right.
then so my mum is a banker as well, so she works at a local branch, Bendigo Bank, but at the time she was at the CBA as well. And my mum used to work with Carol back in the day, and then she said, look, why don't you go have a chat with Carol and see what your options are? And then Carol mentioned to me, this is, you could do this, this and this, and then also the guarantor option, which, she knew that my parents had equity in their property.
Yeah.
And then that would be a solution for me to be able to utilize the equity in their property to get on the property ladder and start purchasing.
So that part's really important, right? So you got to speak to someone to
Yep.
actually find out. So don't assume,
Yeah.
because if you didn't speak to that person,
I
you,
wouldn't know
you
about
might
it.
be thinking, oh, I need a 20% deposit.
Yeah.
Your parents might be thinking the same way. And then it would have delayed you many years compared to being able to buy it because you started that conversation
Yeah.
and somebody introduced something new to you.
Absolutely.
Yeah.
I think probably 4 or 5 years later, that same property went from 300 grand to 550 grand. So, that 3 or 4 years or even 5 years, that would have taken me to save a 10 or 20% deposit. I would have been having to save a 100 grand deposit as opposed
Yeah.
to 60 grand back then.
Yeah.
So it's a huge difference.
So I think the lesson is that, don't make that assumption.
Yeah.
Because you might think, oh, I work casually, I can't get a loan because I'm casual,
Yeah.
or I'm in this situation, I can't get a loan. Go speak to a mortgage broker or speak to someone from the bank and see what other options are available because you wouldn't know about it.
100%.
My version of that was the first home buyers grant. So I didn't know about that until I started speaking to the mortgage broker.
Yeah, right.
But I was in a slightly different position. I did use the Bank of Mum and Dad, but I used the Hotel of Mum and Dad version of it. So I had, I was working like 2 and 3 part-time jobs since I was like 13, 14, right? So I saved up quite a bit of money for the initial deposit, and my brother and I bought together, so he had saved some money as well. But the fact that we were living at home using the Hotel of Mum and Dad was phenomenal, because really my expenses were petrol in my car, new pair of shoes every now and then, and going out on a Saturday night. Right? There was no rent, there was no food, there was nothing. There was nothing. So being able to make those repayments quite easily was perfect. We did use the first home buyers grant, so we had to live in the home for at least a 6-month period. But after that, we could rent it out. It became an investment property.
Yeah.
So again, we're living at home, no expenses, investment property, getting rental income, and able to do that. Now, you can't do that anymore either with the first home buyers grant. You can't turn it into an investment 6 months later as well. So you would have to live there, right? Is that, or is it?
No, it's still the same.
Yeah.
Still the same.
Is it a 6-month period, or is it a longer period
it's
now?
a 6-month period.
Oh,
so
still
now,
6 months.
Yeah, so now like for the stamp duty waiver, it's a 12-month period.
Stamp duty waiver.
Yeah,
okay.
yeah. So, but I think the main difference is, I think back then you can still get the first homeowners grant of 10K or whatever it was for an
10K
established property.
Yeah.
Whereas now it's only available for
That's
brand
right.
new property.
It was
right,
10K established property. And back then, so is it still 10K?
It's still 10K.
For brand new property.
So
Yeah.
10K, like back then, like we bought that property for about 400.
Yeah.
So 10K of that 400
Significant amount.
is,
Yeah.
significant, right? Whereas now it's probably a little bit different. Now you're looking at 10K for like a 7 or 800 is typically.
Well, you can only get the 10K if you're buying a brand new property 600K or less in New South Wales.
600K, sorry.
Yeah,
sorry.
right. So that's also sometimes a challenge, finding a brand new property off the plan, for example, that's 600K or less. Because if it's over 600K, you don't get the 10K.
Yeah. But look, and I consider myself lucky to be able to have a good Italian boy living at home, right? Parents didn't charge rent or charge me anything to live there.
Yeah.
They wanted to help out. Some people might see that as like a privilege, and I kind of do as well. But I mean, I come from the school of like, I want to help my kids out as well.
Yeah.
They wanted to help me out. Their parents helped them out. Like as you said earlier, like Bank of Mum and Dad is not a new thing. Like parents always try and help their kids.
Yeah.
There's different versions of it, right?
Yeah.
Like what's more important? Like I look back, for me, being able to get the guarantee was definitely very important, but I think being able to live at home and pay other debts, and again, I was the same as you. Like I didn't have to pay board, didn't have to do anything like that. That was probably the bigger help than
living at home.
guarantee,
Yeah,
right?
the Hotel of Mum and Dad is actually the biggest hack in getting into your first property if you can do it.
If you definitely,
Yeah.
if you can do it and you're prepared to stay with your parents a little bit into the 20s, like a lot of people don't want to.
Yeah.
Fine, but I think that's the biggest
Yeah, I
hack
flew
you
the
can
coop.
possibly do.
Mate,
Pretty
my mum's
much as soon
cooking.
as I
I'd
could.
still be there now.
Your mum's good.
My mum's cooking, man. I'd go back today.
Yeah, I'll move in with your mum.
How does Tina feel about that?
The restaurant of Mum and Dad.
We're going to eat out tonight.
We're eating tonight at Mum's house.
Jace, I'm interested, I don't know if you know, like off the top of your head, but I'm interested, from a mortgage broker point of view,
Yep.
like how many of your clients, or like, do you see this Bank of Mum and Dad, do you see it coming up more and more in the conversations that you're having with your clients in the last couple of years, or has it sort of been pretty steady? Like this
Pretty
is
steady.
always,
It's pretty consistent. And often we introduce it as well. So similar to what Chris's experience is, that the customer or the first home buyer, for example, whether they're buying investment or owner occupier, they'll come to us to work out what their options are.
Yeah.
And then we'll let them know that, look, based on your deposit, you're going to pay LMI. But do your parents own property? Right? And they'll say, yes, they do. Okay, great. Did you know that you could do this? And this is how it works. And that's how much it's going to save you of unnecessary LMI.
Yeah.
Right?
You're bordering on some tricky territory here, because I've seen a lot of mortgage brokers suggest using parents' equity or using the Bank of Mum and Dad, which is great, because then the kids go, hey, Mum, Dad, you can help me do this. I don't have to pay LMI, et cetera, and they're all in. But sometimes the pitfalls are not explained correctly, because I think if some parents understood the risks involved, maybe they'd rethink it.
Yeah. So that's a good point. So what we have to do is we have to interview the parents separately.
Yep.
Yeah. So
Without the property
without the
buyer
borrowers.
there,
Yeah, correct.
borrowers.
Yeah. So we have to have a separate meeting. Yeah. So that there's no sort of influence and pressure. so that the parents can have an opportunity to ask
They
any
understand
questions.
all the risks.
There's fact sheets that we have to provide. So these are all, obligations that we have to do.
Yeah.
Whether the parents have already made up their mind prior to the meeting is a different story.
Yep.
But we do have to follow a process to ensure that the parents are doing it voluntarily.
That's good to know. I didn't
Have
Yeah.
you seen any parents flip? Whether they
Yeah,
were
that's a
coming
good
into the
question.
meeting agreeing to do the guarantee, and then you've explained the risks and whatnot, and then they've backed out and they said, no, we're not doing it?
Yeah, not necessarily that, but they've come into the meeting finding out about more things. So, for example, they'll have questions that their kids weren't able to answer. So usually the kids will have a conversation first, right,
Yeah.
to float the idea, and then we'll have a meeting with the parents. Then the parents will realize, oh, okay, so if I was to sell this property, that's how it's going to impact
Yep.
this and that. So I won't get as much money back or profit because it's got to pay off that part of that loan.
Can we talk about that scenario?
Yeah.
So let's use my scenario back in the day. So I bought a 300 grand property.
Yeah,
I had a 60 grand guarantee on my parents' house.
yeah,
Let's just say that they didn't have a mortgage. And so then there's a 60 grand there that's sitting on their house. If
Yeah,
they
correct.
decide to sell their property, what happens?
yeah. So if they decide to sell the property, the bank will need to reduce your loan down to a level that you're either going to pay LMI or no LMI. And if you don't have that money to pay that loan down,
They're liable.
correct,
Yeah.
the bank will take the money from the proceeds
settlement.
of the sale.
So,
Yeah.
so is that
Right.
one of the? So there's a lot of good things about from the purchaser side. There's a lot of good things about using the bank of mum and
Yeah,
dad.
correct.
Yeah.
What are some of the negatives for the parents? The risks.
Well,
so that's a risk potentially.
That's one example because when the parents sell the property, that effectively turns it into a cash gift, right? So initially it was just using their equity to guarantee the loan.
Yeah.
No money outlay. But if the parents go sell the property and then their kid or the borrower can't actually pay down the loan, and let's say the parents don't want them to pay LMI, then the bank's going to take an amount of money, say that 60 grand, from the sale of the property that would have gone to the parents.
Yeah, okay.
So that turns it into a cash gift.
This podcast is brought to you by Coposit, where 10K means you can buy a brand new home. For more, check out the Coposit website in our show notes.
Speaking of cash gifts, where parents give a cash gift to a young couple to purchase their home.
Yeah.
A few years later, a young couple splits up. There's
Yeah.
now a dispute as to who owns how much of what of that property.
Yeah,
as well.
that's right. That's right.
So
so split is a risk as well.
the intentions of the parents is to help their kids. They're not worried about the fine print, in most cases.
Yeah.
So all of a sudden something like that happens, it can get really nasty.
Oh, for sure. I think the biggest pitfall is relationship breakdown.
Yeah.
Either with the borrowers, say if it's a couple, or the relationship breakdown between the parent and their child.
Well, it
even-
would
I
put
didn't
a
even
lot of
think of that.
extra strain
Yeah. I
I think
on
there's
the
another one as
relationship.
well. Like, what if there's multiple siblings and then
Oh yeah, 100%.
the second sibling wants that same help? How does that impact? Can the parents have two guarantors?
You can, as
Yeah.
long as there's enough
equity.
There's enough equity. So you can guarantor one child, and then you can guarantor another child. And
You
we've
get
got
a guarantee.
situation-
You get a guarantee.
Yeah, 100%.
Everybody gets a guarantee.
As long as there's equity.
Yeah,
right?
okay.
But that just amplifies the situation. To your example,
Yeah, of
if the
course.
parent was to sell and want to make a decision in their own personal situation,
Like they can't.
they have to consider a lot more.
Mm.
Because you can't just expect your child who you've done a guarantee for, and the amount's quite big these days. Right?
Yeah.
So let's say it's 20% or whatever. It could be 100 grand. So someone's not just going to have 100 grand to pay down their loan, so you can be discharged of this guarantee. So there's a lot of implications.
I think an important point there, like what you were touching on just before, Michael, is that like people go into these scenarios, like the parents want to help, like it's all good intentions. The children are trying to, get secure housing or get an investment property and safeguard their financial future. And everyone has a really good intent going into it. But maybe what that means is that, the conversations around worst case scenarios, or what happens if, you and your partner split up, or if that's a scenario, or what happens if we sell the house that we've gone guarantor, used to go guarantor on. Like maybe people aren't having those conversations and going through those worst case scenarios because you don't want to kind of foreshadow
Yeah.
this shit's going to go down. Like you don't want to think about that, but it is
Like
so
prenup.
crucial because we don't have a crystal ball. We don't know what is going to happen 5-10 years into the future. So to have
That's
those
exactly right.
conversations with, financial professionals is so important. So
Yeah,
important.
absolutely.
And it's interesting because the new BOMAD that we talked on, so not everyone has access to mum and dad
Yeah.
to be able to use a property.
Mm.
So the new one, I think we coined it, what was it yesterday? BOG?
It was BOG, yeah, the Bank of Government. Yeah, which sounds the name sounds appropriate. You know, when you think about government, the BOG.
It's a pile of shit. Yeah. No, I think so. So Bank of Government, right? So
Yep.
there's if you don't have access to the Bank of Mum and
Government.
if you don't have access to the Bank of Mum and Dad,
Well, yeah, it's funny because you're to take this before it goes further into the gutter, Chris. One of your brokers at Calito, David, you guys walked into the office a few days ago.
Yeah.
And I overheard a part of a conversation which was hilarious to me. David says to you, "I wish I was a first home buyer today. It's great."
that's probably the first time I've
And
ever
I've
heard
never
and
heard anyone
only,
say this
yeah.
before, that it's great for a first time. I wish I was a
Are we in
first home buyer
1980s again?
today.
Like,
He
what
should
happened?
start writing headlines for Daily Mail. He
yeah.
would do huge. Like, can you imagine the clickbait on that?
But further context is there's actually a whole lot of options for first home buyers to get in.
That's right.
Like government
outside
support?
of government support
Yeah, right.
wise, outside of Bank of Mum and Dad. So what are they before we go too much further?
So Bank BOG, Bank of Government. So you've got the Bank of Mum and Dad, which can go guarantor against their equity or their property, but Bank of Government. So what's available out there? If you don't have access to Bank of Mum and Dad, what's available?
Oh, you've got the first home guarantee. Right?
Okay.
So that's a national thing. So it's
I've
not
used that too.
state-based.
I've
So
used the
federal
BOG and the
government
BOMAD.
policy.
Yeah. Sorry?
Federal government policy, national.
Yeah. So essentially, it's like the government being your parents and being a guarantor. Okay. So you only need a 5% deposit. Then you can borrow up to 95% of the property value and not pay any mortgage insurance. So the biggest benefit is you don't have to pay lender's mortgage insurance.
Okay.
So lender's mortgage insurance is something you got to pay whenever you borrow more than 80%.
So you can't do 100%. You need a 5% minimum.
Correct. You need a 5% minimum.
Okay.
All right. So it's potentially going to save you 10, 20, 30 grand because lender's mortgage insurance goes up exponentially. So if you're borrowing 90% of the property value and you got a 10% deposit versus borrowing 95%, you could get to a point where every extra $1,000 you borrow, it'll cost you $3,000 or $4,000 in lender's mortgage
That's
insurance.
insane.
Wow.
Yeah. So it goes up exponentially.
Really?
Yeah.
Anything you can do to avoid it.
Correct. So
Right.
so it's like a necessary
Yeah.
evil, right? So if you don't qualify for this, you don't have parents to guarantee, you need to buy the property, you don't have enough deposit. Yeah. It's also a benefit too because instead of you continue to rent and wait as property prices go up and you're trying to save, you can borrow now or buy property now by paying lender's mortgage insurance as a once-off premium.
And the trap is you almost don't notice it too because it forms part of your mortgage. As long
Gets
as you
added
can
to your
service
loan.
it, it gets added to your loan.
So it doesn't have to come out of your
Yeah.
pocket. And because it gets added to your
Yeah.
loan,
It's like, oh yeah, it's an extra 60 grand on your loan. It's like, oh, that's fine. I'll just pay an extra whatever.
and you
per
pay
month.
interest on that.
Yeah.
So it's
Yeah.
not actually by
Yeah.
the time you pay it off, it's not 60 grand
It's a
anymore.
lot more.
It could be
Yeah.
80, 90 grand because you're paying interest on.
So some of the key differences. So Bank of Mum and Dad, so you can have no deposit with Bank of Mum and Dad,
Correct?
and you can buy an investment property or your
Correct.
first home.
Correct.
Or
Yeah,
anything.
so investment or owner-occupier with Bank of Mum and Dad,
But Bank
using
of
the
Government?
first home guarantee, Bank of Government, it has to be owner-occupier. And you
Yeah.
have to continue living in the property
And you need
while
5%
it's under a
deposit.
guarantee.
Okay, so you can't turn that into an investment after
Nope.
6 months.
No, so the only time you can turn that into an investment is when
Once you got 80%.
you don't have the
LMI.
government guaranteeing you anymore.
Once
So-
your loan to value ratio is
Correct.
up to like
Correct. So the
80-20.
property value is going up. You're paying down the debt. So how much you owe is equal to 80% of the value of the property. That's
Right.
when you can release the
Why?
government.
Why is that? Why would they make it that you can't use it on investment properties?
Oh, because they
It's a policy for first home buyers. They're trying to
Yeah.
help people get into the market.
Right.
to live.
Okay.
They're not trying to
To
help
live.
that
Yeah.
that crazy landlord get 50 properties.
Right.
It's the
But
whole
what if it was
property
like
as a
a
shelter
first
thing.
investment property buyer?
And they don't own a house. They're living at the hotel of mum and dad,
Yeah.
for example.
Yeah. Yeah.
Well, I think they're
correct.
trying to encourage people to get into their first home.
Yeah.
Well, that's the
Okay.
priority.
To
Yeah, the
have
priority is-
stable, secure house.
Correct.
Yeah,
It's a
it's more
first-time buyer.
important
That's
than.
right.
So it's probably good. We talk about, how government needs to step in. That's probably good government legislation right there.
Well,
It's an example
that's
of
been a
positive.
great one. And,
Yeah.
and before the interest rates increased, that was so popular.
Mm.
People were buying property with only 5% deposit. And at that time, when the interest rates were really low, the situation was the only challenge or the hurdle was deposit because people were on really good income, or the young people were on pretty decent income. The rates were low.
Yep.
So the borrowing capacity was generally not an issue.
Yeah.
It was just deposit.
That initial deposit. Yeah.
So it sounds like for Bank of Mum and Dad and Bank of Government, borrowing capacity or serviceability is an issue for both because
Correct.
you're borrowing more. So with Bank of Mum and Dad, you could be borrowing 100%, sometimes even more.
Absolutely.
And with Bank of Government, you're borrowing a maximum of 95%.
Correct.
That's
So
still-
neither of those help you with
On
borrowing
serviceability.
capacity.
Yeah.
Or
So we're
serviceability.
talking purely on the deposit side.
Correct. So there's kind of this misconception that, I just need a 5% deposit and I'll be able to get a loan for 95%. That's not true.
Yeah.
You might need a 10% deposit and get a
Because your
loan for
income's not
90%.
enough.
We saw with Kirsty the other week. All of a sudden, she needed to find more money because of that. borrowing
Exactly
capacity
right.
issue.
So and it didn't sound like she borrowed 95%.
No.
What slight change in topic, but I wonder what the mental impact might be for some of our younger people with banker mum and dad. Right? I look at you, Zaz, because you're the youngest person on this panel. But
Spring chicken.
As a parent, I want to help my kids. My parents wanted to help me.
Yeah.
But is there a bit of like secrecy or negativity around needing help? And I don't think there needs to be, because
Yeah.
everyone needs help at some to get their first,
Yeah.
pretty much to get their first property. Everyone could use help, I should say.
Mm.
But is there like a bit of is it a bit taboo to like speak about, hey, my parents helped me do this, or I'm living at home and blah blah blah, like for the younger gen?
I think it like depends. Like me personally, I'm pretty open about the support that I get and all that. I feel like I am pretty open about that in general with my friends. But it's probably not something that like I would ever actively bring up, because I wouldn't want to make someone look at their own situation and feel like that, like make that comparison or influence like their self-esteem or confidence that they might feel about the situation that they're in. If somebody asked me, point blank, like, what kind of support do you get, or how did you make this happen, or that sort of thing, like I would answer truthfully. But yeah, I don't think you would kind of bring that up in a casual conversation of like, my parents bought me a unit here, because like, I feel like it is a bit, I don't know.
I see online a lot.
showboaty and
I see online a lot people, like young successful people, doing their thing on Instagram or TikTok or whatever, and the comments are like, "Oh yeah, who did Dad buy you that house? Did Mum and Dad help you there?"
It
It's
makes
always
up a
like
big
this
part of the
assumption.
rhetoric and on social. For
So
sure.
I just wonder if there's a real negative vibe from a mental, like I can understand that too from a perspective, because you want to be able to make it on your own as well.
Yeah.
But sometimes you just need some assistance.
I think as well, like, the when you read the data that's out there, like actually something I prepared earlier, but in terms of recent data, you need to earn across Australia $164,000 a year, which is 2/3 more than the average salary, to be able to buy property in capital cities across Australia. If you're looking in Sydney, where we are, it's almost 300K. Like that is your average.
Yeah, but that's always
annual
focused
salary.
on houses, right?
Yeah.
Like that's the
Of
thing.
course, that's looking at houses. But I think you see numbers like that, and again, this is sort of sensationalizing stuff.
Yeah.
But it does make you go, well, yeah, like this is really hard to do, without support and without help, and not everyone has access to it, which is the tricky thing, because that's that probably leads to that it being a bit taboo. You don't want to kind of
Yeah, but I think with the bank of government now, I think everyone does have access to it. I think that's what that policy's effectively done is, if you don't have access to bank of mum and dad, you've got access to the government scheme, then that's giving you the avenue. I think in terms of, people feeling shame or whatever it is I think people should be getting that out there. Like you're saying, you don't want to make people feel bad or guilty about their situation, but maybe you can having that conversation with your friends.
Yeah.
It might make them feel bad. That's fine. But it could lead to them actually looking at their situation and going to have a conversation
It can
with
actually
mum and dad,
help.
or going to look into the government scheme and going to look at the property ladder if they want to get on the property ladder.
Yeah.
Man, what makes people feel bad is articles in the media. Articles like that, or articles like first home buyer bought in Coogee for 1.8 million with the help of mum and dad.
Yeah.
I
That
think even
stuff
further, like
is really annoying, man. Like, because that's not a true reflection, and they're always exaggerated hyperboles. And that's where I think people who then consume these articles think, they're only doing it because mum and dad, right?
Yeah.
But
It feeds
man,
into that.
How many first home buyers are buying a 1.7 or whatever in, like, say, eastern suburbs or near the beach, and this that they don't talk about first home buyer bought 350K unit
it's true.
in the burbs, right?
Yeah. That doesn't
But I think
make
what
the
makes it worse is
headlines.
some of these property bros, they get out there and they start like, here's how I bought 50 properties with on 30
they're
grand
the
of
worst,
income. Like,
man.
I get it.
Avatorials, right?
Yeah.
70 grand income, teacher, buy 7 properties.
Yeah, buy 7 properties. By the way, buy my course. Like, it's just...
Yeah.
I
Anyway,
think that's what actually frustrates people.
yeah, 100%, man.
Yeah.
100%. That's what creates the tension, I reckon.
Then we should
Yeah.
get that trending, property bros.
I think it might be trending.
You're late to the party.
Yeah, right. Okay.
Nice try. Nice try.
I tried. Yeah, so like speaking on property bros, like the people that are looking to try and sell courses or they have those 10 properties, like I think that's what people get annoyed about, where they see like these people that have accumulated 10 or 15 properties and they've done it over like in the last 20 years where things were a lot cheaper. Like I think that's what becomes an issue.
Yeah.
So like you've got Bank of Government, you've got Bank of Mum and Dad. Like there are other alternatives out there.
Yeah.
Like to help with whether it's a deposit or whether it's getting into the market.
Because sometimes you might not qualify for both. So
Correct.
so your parents can't be your guarantor, or you don't meet the criteria for the Bank of Government, because there's income thresholds, there's purchase price thresholds, right? There's citizenship, permanent residency requirements.
And the government support is quite limited in terms of numbers.
35,000 spots. You know, there might be no more spots.
You might want to have an investment property, or you
Correct.
might be a downsizer looking to sell your property.
So let's not beat around the bush. There's a whole lot of like lower deposit schemes out there. And look, we don't want to be too advertising, right? We've done 22 episodes without really mentioning what we do. But I think this is a perfect scenario to talk about Coposit, because Coposit could be a solution here if you don't have access to Bank of Mum and Dad or Bank of Gov, or you do, but you might think this is a better way to do it. So CEO of Coposit, Chris, like what is Coposit in your...
Look, I think, you know, Coposit was created to help people who don't have the deposit. So, you know, you can buy a brand new property with just a $10,000 deposit and pay weekly payments whilst it's being built to get to that full 10% deposit. Or it could be a 5% deposit if you're in the ACT. So I think, you know, what we've been able to do here is see hundreds of people get into the property market who haven't had that full deposit up front. So I think that's what's been really special about what we've done. And people probably maybe even still use some of the government schemes or Bank of Mum and Dad, but just being able to they need that break in the market. Like it's very hard to save.
It's very relevant for this episode and relevant for us because a lot of the first home buyers that have utilised Coposit, how do you find out about us? Oh, my parents told me about it. Or my parents said I can do this. Or my parents maybe chipped in the 10K and then I have to make the weekly payments. And I think that's actually quite good for the kids as well. Because like as a parent, we've touched on this a little bit. As a parent, I want to help my kids, but my kids might want to try and do it on their own. So this kind of gives the best of both worlds in a way.
Well, if Coposit was around back when I was purchasing, I know my parents would have just said, look, stay at home, do the hotel mum and dad side of things, but why don't you look at this first? See if there's any properties that you can look at on this side of things, and then maybe we don't need to go guarantor.
Yeah.
You know, because I've got a brother and a sister, maybe they wanted to go guarantor for them as well. So then all of a sudden you've got three of us that want to go guarantor. They may not have had enough equity to do it.
Yeah.
To do it for everybody.
It's another tool.
And they can still use a first home buyer's grant at the end as well.
Correct.
Yeah.
So, you know, I think it's a real advantage, whether you've got Bank of Government, Bank of Mum and Dad, or using even what we do here at Coposit to help you get into the brand new property market. I think that's actually some of these advantages to help people.
All right, I feel dirty. We're so advertising. No, that's great.
Go have a shower.
Relevant to this topic, right?
Yeah. But yeah, knowledge is power. There's heaps of options out there, and I think it's important, you know, have that early conversation because if you don't have access to financial support from parents or, you know, relatives, and if you don't qualify for the government scheme, there are other options out there. So it's always good to know what you can tap into.
Absolutely.
Yeah.
What a great episode.
Peace.
Love it, guys.
Love it.
Thank you for another awesome chat. Until next week.
Thank you, Zaz.
Woo, bye. The Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and they are general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.